So some things we'll be talking about is this idea of, are all sales created equal? Sometimes we think that any dollar is a good dollar, and no matter what marketing channel we use to get it is good. And so we're going to talk a little bit about marketing mix and marketing channel, and marketing channels, marketing costs with that part. Second issue is, how do I know which parts of the farm are making money? It's been my observation a lot of people that are local food producers, are produced for local markets, have a mix of enterprises. And so how do we kind of split apart these different enterprises from kind of your expenses and revenues at the whole farm level? Third part is kind of, where am I at, and sort of how is my operation doing, both in terms of your overall net worth and profitability. And here we're just going to give a short overview about some of the basics of financial reports, like income statement and balance sheet. And lastly, we can't do this without talking about kind of this broccoli of the farm business management world, about records, in terms of how to get your farm's financial life in order. So Karen did introduce me, and I just thought I'd talk a little bit about my background, in large part that you get an understanding kind of where I'm coming from with farm business planning. So yes, I am an extension educator in my day job, and I do a fair amount of market analysis and economic analysis, and being somebody in community development, oftentimes this is at the community-wide level and not at kind of an individual firm level or business level. But in my private life, you see at the top here, my wife and my 3 kids that Karen mentioned here earlier in our greenhouse, and you see a picture of me kind of in action, as opposed to wearing the tie on the left. Here I am kind of in my farmer getup, harvesting some dino kale. So our farm, this is our 11th season where our farm's at in Northern Lyda Township. Just last year, we became a certified organic operation as well. And over that time, we sold at farmers markets. We do CSA, which is currently our 10th season. And we also have sold to schools, assisted living facilities, hospitals. We sold to restaurants. We've done things for events. We've hosted on-farm events. So we've kind of run the gamut, if you will, in terms of a primarily vegetable operation, but one that's diversified enough that we also market broilers, hogs, and we do keep a fair amount of livestock on hand to support the produce business. So that's a little bit about where I come from. Before I kind of get into the nitty-gritty of spreadsheets and numbers and all this kind of stuff that often scares people away from this topic, I really like to talk about sort of the big picture of farm business planning. And one thing that I would, part of my background is for 3-4 years I've done a course at M-State for beginning growers, initially through our Sustainable Food Production Program, and now through the equine program at M-State. And now I always have to emphasize that when you think about farm business planning or business planning in general, there's a lot to it, right? You can kind of get lost in spreadsheets, lost in numbers, lost with, what am I supposed to be really working on to get direction, if you will. And one thing I always like to emphasize when I think about local food producers is just to back up and decide about what your major goals are, right? What's your vision for the future? What are some of those short-term goals that you have? What are your long-term goals? And how are you going to get there? And a lot of times this is dictated by where we are at developmentally, personally, and as a business as well. I got my 2 pictures here at the bottom. If you're the babes in the woods, the honest to goodness beginning growers here, your goals, your needs, your thinking about farm business plan is going to be quite a bit different than our salty veteran here on the right, right? Somebody who's been at it, he's got very different concerns. And so I often ask people to think about the big picture first, and then drill down to those things that help you steer you in the right direction, right? Start with your goals, and then get the information that can inform your goals, and inform the direction of where you're going to go. You got to start off, where are we at, Where do we want to go? And let's get the right information so we can make some decent decisions about how to get there. And that's really what we're trying to do with farm business planning. And in my course, we often talk about, and I do use the resource of Building Sustainable Business, which is in that Moodle course, which really focuses on whole farm planning. And although our presentation today, I'm getting into the basics of farm financial planning and some farm financial analysis, you know, some of these goals that you might have and these concerns and issues you might have around your farm, around some of the land goals, environmental goals, social goals are equally as important. I don't want to discount that. If you're thinking about your whole operation, it's really good to do a little holistic management, think about some holistic goals for your operation, and those might not have anything to do with financial viability, if you will. It can have, like this picture on the left, how are we going to improve the soil over the next 5 years? It can be a social goals relates to how do we work together better as a family? How do we incorporate community into our farm? How do we interact with community in our farm? It could be an energy issue on farm. All of these things are good planning goals in the short and long term. Thinking about your whole farm and where you want to go, and what you want your farm to be known for. So a few examples, again, depending on where your farm is at. Some examples of short-term goals, long-term goals. I try to put in a good mix here. There's some good short-term goals. It might be as simple as, hey, I need a piece of equipment. I need a tractor. For those not even currently in a farm business, it might be about saving that nest egg that will allow you some entry into the local foods movement. You might have a short-term goal. I'm going to save $150 a month to build up a nest egg. Some of your goals might really relate to educational goals, right? If we're going to do broilers, we're going to have to figure out how to do them well. Let's spend some time with somebody who is doing them well. Let's take a course. Let's go to some workshops. Let's go to Moses, what have you, to learn what you need to do an enterprise well. So it might be an enterprise that you already have on your farm, and you just know that it's not as profitable as it should be, right? One of your short-term goals might to increase, here's my example of increase return on your hog enterprise. You're doing it, you think you're doing a pretty good job, but you know what? The return at the end of the year just isn't that great. You know, how could you be more efficient in that? You know, this is something that you want to figure out. And again, some of them could and probably should be social goals. One short-term goal might be you want to take every Sunday afternoon off work. You've found yourself, you've done this long enough, and you found that, you know, the thing that's really holding you back, your real limiting factor is you're completely stressed out all in the middle of the season. And so some of those social things should raise to the top as a goal that you do something about. And these short-term goals should lead to these longer-term goals. Like, here's a good one, get along with spouse, right? I think many of you would agree, this is a good long-term goal. It's very difficult if you're in a business together and you seem to be fighting and stressed out all the time to do that business well if you're not getting along. So you can have that short-term goal, which might lead to this long-term goal of getting along with your spouse and doing work better together, if you will. So again, think about those goals as a good place to start for the big picture of where you're at, where you need to go. So let's get kind of the first topic I was throwing out there is this issue about, are all sales created equal? It's been my experience, a lot of people kind of in kind of the local foods markets are kind of like, hey, I'm just starting out here, it's a few years, I want to get any kind of dollar in my hand that I can. How could I get more, how can I just sell my product? It's as simple as that, Ryan. That's all I'm really interested in. The more dollars I have in my hand, the better off I am. And granted, I completely get it. It feels good. You go to that one farmer's market, or you start up a CSA and you got kind of a little wad of cash in your hands. And you say, you know what? Great. I'm making it. Look at this. I've got the money in my hand to prove it. But as you see on the slide here, kind of are all sales created equal? No, I give it an emphatic no. And what we like to talk about here is this issue about marketing costs. Marketing costs matter, and they matter a lot to local food producers, if you will. I bring this up as the first thing to bring up when thinking about farm business planning, because in large part, when we're talking about local foods, the core of local food movement, of local food businesses, the backbone of it, if you will, is direct marketing. And from my own experience and from other farms like mine that I've witnessed over the years, oftentimes we juggle many marketing channels, and more often than not, it's a mix that looks a little something like this map on the right, right? We might have a farm a little north of Forest Lake. Over here in Cambridge, in this little circle, we've got a farmer's market there. We sell to a grocery. Over there in Princeton, there's another farmer's market. We've got a drop site over by Elk River. People can pick up on farm, right? We also do on-farm pickup orders, right? What we tend to do is stack a lot of marketing channels, and we have kind of a healthy what we call a marketing mix, right? So we sell a number of different ways, our one product, a number of different ways to be profitable. And so with this, it's good to kind of step back and say, okay, of those marketing channels, of that marketing mix, which part of our marketing mix is most profitable? Which one has high marketing costs? It's really going to help us be more strategic about where we're selling our products, how we're selling our products, and at the end, be a little more profitable than just saying, any dollar is a good dollar, and I'll make a sale anywhere I can. So if we go on here, looking at marketing costs, we're talking about, some people call these transaction costs sometimes. We're talking about our travel costs, the time related to that particular marketing channel, that time in travel, that time in selling. So travel to a farmer's market, the time selling at a farmer's market, any kind of incidentals related to that particular marketing channel. So for me, I go to the Lakes Area Farmers Market in Detroit Lakes. I've been there a little over 10 years now. And it seems like every time I go there, I seem to buy lunch for the entire family. I call that an incidental, and I'm going to count it as a marketing cost. Supplies, this could be boxes, signage, marketing materials, brochures, bags, your stall or market fees, kind of any expense related to a particular marketing channel. Going through an example from my own life, this is kind of a rough sketch about my own marketing costs when I sell at the Lakes Area Farmers Market every Saturday. Mileage, it's about 50 miles round trip. Right now we're at 57 cents a mile, but let's just swing it at 50 cents a mile, $25. Supplies on average, maybe $8, $10 in terms of bags and the cost of a canopy, split out per market. Our marketing fees, we spend $125 a year, well now $150 each year. We go about 15 times to the market, so that's $8 each time I'm going to the market. My time at the farmer's market, there's two of us, myself and my wife, both at 5 hours each. We just throw in approximately $10 an hour. That's $100, and 10 is probably like $20 in lunch. So if we add up our marketing costs for one Saturday farmers market, it's about $132, maybe $142. One way you can look at this is sort of your break-even marketing costs, right? This is often what I think about when I think about whether I should go to a farmer's market or not, right? If you do this calculation for a market, you say, these are my marketing costs. If I'm only making $50, I'm going backwards, right? So, I've kind of, in talking about my own marketing costs, my own operation, we've always said, if we got about $200 worth of stuff, we can kind of see ourselves doing about $200 worth of sales. We'll go to the farmer's market because then I'm assured of covering all of my marketing costs and then some. And so thinking about a kind of a marketing mix, that's just an example for marketing costs for one market channel. What we really want to do is do kind of an apples-to-apples comparison across all the places where we're selling our products, right? And so the way I like to think about this is let's not drive ourselves crazy by thinking about the production cost, that is the cost to grow the crop or raise the animal per market channel. Let's just say that's constant. Let's only look at those marketing costs and then compare the marketing costs from marketing channel to marketing channel. So the formula for this is fairly simple, and I'll show you an example here in a second. What you want to do is add up all those marketing costs, kind of using the constant measure. Have a per delivery basis, per day basis, per day at a farmer's market, per delivery for each CSA, something like this. And then doing these calculations, find the total for the year. And then what we'll do is then calculate a percent return over marketing costs to kind of have an apples to apples calculation. So our example here, which I think is not unlike a lot of local food producers that I've run into, we might go to two different farmers markets, as we see here at the top, Farmers Market 1 and Farmers Market 2. Right here, Farmers Market 2. We have a farm stand. We have a grocery we sell to that's fairly nearby. We also have a school that we're selling to. And these aren't really, these are just numbers, just for the sake of an example. And what we're doing is we're adding up the total revenue that we made at through each of these marketing channels. 2,000 at this one, 3,000 at this market, 1,500 at a farm stand, 800 at the grocery, 600 at the school. We marked down how many days we've gone, how many days the stand was open, how many deliveries we made to the school, and we'll get a sense of the revenue each day. Then what we do on a day-by-day basis is here for our Farmers Market 1, we'll add up all of those marketing costs, just like we did in the former slide. What's our travel cost, what are our time, our fees, what's the total per day? Our total per day is $88 a day. We went 12 days. We have a total of a little over $1,000 in total marketing costs for the season. What we're doing is get a net return. So what we're going to do is we're just take that $2,000, our total revenue, subtract out our marketing costs, and what's left in our pocket from that market channel, right? And that's also $88 per day. Now what we do is just say, let's calculate for an apples-to-apples comparison, kind of a return over those marketing costs. So what we do here is we take this net return, our $944, and we divide it by our total revenue. So in this case, we're taking 944 divided by 2,000, and it's kind of a 47% return. So one way to think about that is for every $1 that we're earning at this farmer's market, we're keeping 47% of that dollar each time. So we do this across each of these marketing channels. We can kind of have an apples-to-apples comparison to say, is this one more profitable than the other, right? And we're doing this to kind of make a strategic decision, We look at the farm stand, boy, man, there aren't a lot of marketing costs. If it's just about marketing costs, we're really retaining a lot of those sales in our pockets, and they're not going out the door for marketing costs. For the school, boy, that's doing pretty well, or 58%. But this second farmer's market, man, 23%, just not doing so well. And that nearby grocery, it's okay. So if we're doing kind of trying to make some strategic decisions, we might just say, let's just put more time and effort into this first farmer's market and just nix the second one. Just get rid of it. Drop out of it. We're just spending too much to sell there, is what it's coming down to. But for every good reason, you got to kind of have some context behind it. I put this little asterisk at the bottom. You could still have some good reasons for keeping a market channel with high marketing costs, right? You want to do the comparison. You want to say, what do the numbers say about what kind of return we're getting? But you can have some context behind it too. For example, our farmers market number 2 here, that might have been our first year doing that market. So we'd expect maybe the sales weren't as good as they could have been. Or it could be that, our sales weren't that good, but, we made really, really good contacts with a number of customers where we we prearranged a lot of broiler sales. We prearranged a lot of hog sales. We prearranged like a lot of quarters or halves for beef. And, so if we're just talking about produce and our sales right at that market, it's maybe not that representative. So you kind of got to talk through these numbers and to make an informed decision. It's good to do the comparison, do the calculations, but then take into consideration some of the other issues that might be at play. Let's see. So one last piece on sort of this whole issue about marketing mix. There's a little piece of research that's come out here a couple of years ago by some applied economists. And what they did when they looked at some national data is actually found that folks with a more diversified marketing mix, that is, they were involved in numerous marketing channels, many marketing channels, and not just direct market channels like CSA and Farmers Market, but also intermediate market channels like selling to a broker or selling wholesale, were more profitable than those with only direct marketing sales. I mean, some of this kind of makes sense to me. And if you think about it, if you only sell at one farmer's market and that's all you do, I always think that's kind of like your one shot to sell what you raised, right? It is your only marketing channel. And you might not be able to sell as much as if you had two, right? So that's kind of what the research is telling us in terms of, having that diversified mix of markets is actually pretty helpful for the bottom line. The question becomes for you is kind of which ones are the most profitable and which ones should you spend your time and engage in. So I might stop a little bit here kind of on marketing costs, Karen, and kind of check in with you. And for those of NPR nerds out here, she's kind of like my Stephanie Curtis, if you will. Checking what's going on chat there. Any interesting questions?
Yeah, we do have one question. Peggy'd like to ask, do you also track how many people find you from the market? And I think you were kind of starting to get at that here with this last slide, but if you'd like to expand on that a little bit more.
Yeah, definitely. I think that's, one thing that I did do in terms of tracking things, I always think in terms of marketing, it's always best if you can get down to brass tacks and get an actual contact for an actual customer. So one thing we used to do, I don't do as much as I did anymore, is that at a farmer's market, I'm just going to have a sign-up sheet for anything. Like, do you want to learn more? Do you want to learn more about our farm? Do you want to get on our mailing list? There's any number of ways of doing that. But that's a good way of kind of getting a good count in terms of like identifying customers. But I definitely think it's part of your consideration that you need to take into consideration when you're thinking about what's the best marketing channel, right? Which ones are bringing you live customers? So, any other questions?
That looks to be it for now.
Okay. People are either sleeping or they're just actively enthralled, right? I don't know. Okay, I'll take it up. I'll take it up a notch here. So, one primary question that all of us kind of need to ask ourselves is kind of overall, how is my operation doing? I've found in my experience there are a lot of folks that are just kind of flying blind, right? Kind of in the local foods market that. Again, we might have some cash in our pocket and we feel pretty good. We're like, hey, I'm doing all right, right? Why do I need to get any deeper into it than that, Ryan? I'm feeling okay. But really, if I were going to advise you to do any kind of analysis or calculations, I'd advise you to at least just do a balance sheet and an accrued income statement as a way of figuring out where are you currently at. Our balance sheet is going to give us a sense of assets minus liabilities, just like what you would with your own household, but focused on the farm and your farm assets and your farm liabilities. And this is going to measure our net worth. So kind of in terms of like, where do we currently stand with our operation? An accrued income statement is helpful just to say, how did we perform in this past year? How profitable were we in a calendar year? So oftentimes we're thinking about so for us here at the very beginning of 2015, right here we're talking about how did we do in calendar year 2014, from January 1, 2014 to December 31st, 2014. How did we do? Let's add up all the cash and non-cash expenses and revenues for that calendar year and see how we did. And that's where this issue of accrued comes into place, right? So a lot of folks that aren't around accounting a lot are kind of like, accrued, it kind of hurts my head. What are we talking about? And really what we're trying to do is we want the calendar year, we want to take into consideration some of those prepaid expenses for 2014 and some of those owed revenues to us for 2014 from a previous year, right? So for example, late 2013, you plunked down $1,200 on soil mix for the produce season in 2014. you should really accrue that to 2014. You should adjust your 2014 numbers for that pre-purchase in 2013, or you pre-bought propane, or there's an accounts payable or accounts receivable, money that's owed to you or money that you owe. Those things should be adjusted in that income statement, and that's really what we mean by an accrued income statement. So here we are. I was trying to take some pictures to kind of keep this real. Here's like a stack of messy papers from my own office I took this morning. So this is often what you hear, and hey, I've been here myself. I hate financial statements. Okay, but you got me, Ryan. I'm willing to give it a whirl. Where do I start, right? And I know you, as well as myself, we kind of have these messy stacks of paper. It's kind of like the human condition, to have these messy stacks of paper on our desk like this. And I just got to say, hey, buckle down, take a few hours, take a half a day, and just sort through all those receipts, all those things that you've been meaning to get to all last season, but you didn't, right? And just organize this stuff. Because once we get it organized, we can do some pretty powerful things with this organized information. You can't do anything with a stack of papers that looks like this. It's very difficult to deal with. But just, step number one, organize a stack of papers. You've been meaning to do it anyways. It's probably a New Year's resolution. Once we have that, the things that we're looking for are these are the major components to do our two basic financial reports, right? One are all of our cash expenses, all money you spent in 2014, right? So all those receipts from the local lumber yard, invoices from your feed dealer, from your propane dealer, from Johnny Selected Seeds, from the person you buy hogs with down the way, little scrap of paper from your neighbor who's not much into writing up receipts. I've seen it all. I know how it is, right? These are all our cash expenses. We also want all kind of cash receipts. So in this instance, we want money from all of our different sales, right? All the money from our farm stand, our farmers market, sales that we made direct to individuals, or farm pickups. Hopefully they're broken out by those marketing channels, right? But we want to take all those cash receipts. I'm sure you've written them down somewhere. And then we need our starting balances. Beginning of 2014, beginning and end of 2014, how much money was in that farm checkbook? We want to look just at 2014. What were your balances? What were your balances in terms of your liabilities as well? Did you have an operating loan? Did you have maybe a line of credit that you use for the farm? These kinds of things. And then also any of those farm goods on hand, right? We're talking about inventory. Those things that you already bought that you use in 2014, things like this. And then what we need is just a listing of our assets and liabilities. And this is just our farm equipment, our farm machinery, farm livestock that we have on farm, breeding livestock, market animals that we have on farm, any kind of loans as liabilities, things like this. And with that, we can get going with financial reports. Okay, so I'm trying to keep it simple here. You have 4 bullet points. You got these 4 bullet points in place. I know it's detailed, but you get those in place, you should be feeling pretty good. And what I've done here is there's a simple workbook that I've adopted from the Vermont Farm Viability Project. And this is a project that's really was focused on local food producers, especially vegetable producers that direct market a lot. And that's what this workbook was made up for. And so for myself, being a vegetable producer, working with a lot of people that are kind of the new and beginning side of vegetable production and selling local foods, this workbook seems pretty simple in Excel and accessible for people like that. We're also using this in an upcoming project through Extension called the Central Minnesota Vegetable Benchmarking Project, and I'll talk a little bit more about that later. What's nice is there's a lot of preset calculations. It's going to do some calculations for you. It's broken out tab by tab, and I just thought I'd take a little time just to give you a little bit of a tour here because this is a resource for you to use and take those financial information that you have and put it into some kind of organization and it's going to just do the calculations for you, that I find very helpful. So right here, I'm going to share my screen, and let's bring up this spreadsheet. I know it's extremely dangerous looking at spreadsheets together on a webinar, but that's just what we're going to do here. And so the way this is organized, we have what's called a beginning and ending inventory. We're going to list out your assets and things that you have on hand, farm goods on hand, say at the beginning of 2014 and the end of 2014. And this is naturally going to feed into your beginning balance sheet at the beginning of 2014. And then once you put in the entry for beginning balance, it will give you an ending balance for 2014. Also in here, I got promised, if you did these 4 tabs, you pretty much have a balance sheet whipped. And if you move to this tab right here, your income statement, which often if somebody's starting with some kind of financial report, this is one that they're starting with. It's an accrued income statement. This is a place for you to check out your profitability for 2014, right? So I'll spend a little bit of time to overview this. And if you see here, we have cash farm income. Again, this is built for kind of this vegetable kind of people that are engaged in vegetables, but I think you can use it for any enterprise. Some of the language might be a little different. So we have vegetables by revenue. We have non-vegetable production in terms of livestock. We have other farm income received, and it's a total cash farm income. After revenues, we get into cash farm expenses. And you see here, you're going to be prodded to think about what are all your variable expenses. That is those things that scale up or down based on your production. So it's going to ask what's your advertising and marketing? How much did you spend on bedding, breeding, custom hire, distribution, fencing, fertilizer? You get the idea. Based on your records, just input this in here. There's a place over here for notes if you want to put a note to yourself to be specific about what you put in. It'll tally up your variable expenses. Anytime you see a gray box, this is where it's just going to do the calculation for you. Next, you're going to put in your different fixed expenses, right? And these are expenses, some people call them overhead expenses, that are at the whole farm level, right? It may not tied directly to one enterprise, but there's something you're going to, like your tax or your accountant. You're going to pay your accountant to do your taxes. It's $200, $300, whatever it is. That's for a whole farm expense. It's not directly related to vegetables. It's not directly related to livestock. It's kind of fixed expense you just have to pay each year. This will automatically add up all those total fixed expenses, and it's going to automatically calculate for you your net cash farm income, right? So with this, oftentimes this is a calculation we've already been making. What did we spend last year? What did we earn last year? Boom, here we go. We have our net cash farm income. If you filled out the tabs over to the left, the beginning, ending inventory, and your beginning and ending balance sheet, these will automatically be calculated for you in terms of accrual adjustments, right? Like I said, you have to account for accounts receivable, accounts payable, crop inventory, feed inventory, supplies that you had on hand versus the ones that you have on hand now. And so this is going to do those accrual adjustments for you automatically. And with that, allow you it'll calculate your total adjusted income. And then we have accrued income expense adjustments, and then your depreciation expense, which will come from these beginning and ending inventories, right? And with that, with depreciation and those accrual adjustments, it'll calculate for you what's called your net farm income from operations, which is kind of like it's a good bottom line number that a lot of folks will look at in terms of how profitable was I last year. I take into consideration what I spent, what changed in my balance sheet, and if I take into consideration my depreciation expenses, I'll have a good sense about, how profitable I was. I want to go over here for your beginning and ending inventory. Again, just to say, if you haven't done some of this stuff, and that's kind of my assumption here, is that the idea behind this workbook is it's pretty simple and accessible it's gonna just take you through those different assets and liabilities, and you just fill them in, right? And let the workbook do the calculations for you, right? So it's going to ask about your current assets. These are things that are going to be that you're going to see in your adjusted income statement. It's going to ask you about your feed inventory, your crop inventory, your prepaid expenses. I got to make this bigger. Right, people can't see that. It's going to ask for your intermediate assets, right? You don't know what that is, that's fine. It's going to ask you what those things are. What are your raised breeding livestock? What's purchased breeding livestock? And it's going to ask about your expected year's life, what you paid for it, and what is a current fair market value, right? So did you purchased a cow last year? You purchased a ram? You purchased some ewes? How many? What's your fair market value? What did you pay for them? When did you acquire them? What's the expected year in life? And these will do some of these calculations of depreciation for you. Same thing with farm machinery, farm equipment, and other things, and also your long-term assets like farm buildings and such. So I think if you're able just to organize your records and input them into this beginning inventory to do your balance sheet and to do your income statement, you have a pretty good sense about where you're at, right? I know that's a pretty cursory thing to go over here on a webinar, but these are important. These are kind of the bedrock financial analyses. One thing that I will point out on this spreadsheet that I think is very helpful for some of you that are maybe a little more nerdy about farm financial analysis is what's actually embedded in here is kind of a farm finance scorecard. So there's some ratios that farm business folks look at in terms of, are you liquid, are you solvent, how profitable you are, and you have these calculations will be made for you, so you kind of have a scorecard here. Other thing that's in here that you may find useful are kind of cash flow projections. So basically after you're doing your income statement, you might want to then do some cash flow projections for this year and budget out some things. Okay, let me stop sharing. So I think in doing this and not seeing you guys, I bet you I've just confused people, and everybody hates me for digging them into a financial spreadsheet here on a webinar. But just to emphasize, the end products that you're going to get by doing some of this work is kind of get an accurate measure of what your current profitability is, knowledge about where you stand, and it's really some really good insights into parts of your operation about where you can improve, right? You'll get your farm net worth. You can use it for your consolidated net worth, and with our income statement, the big numbers, people will look at your net cash farm income. So maybe you're calculating anyways, but maybe more important, net farm income from operations. So with these things calculated, you kind of have a good sense about where you stand before you start thinking about where you want to go. Okay. Karen, was there any questions? I almost hate to ask.
Let's see. I do have a new question right here in the box. First of all, there was a question earlier about the workbook that Ryan was showing, and that is available on the Moodle website. So if you want to get online and tinker around with it some more, it's up there, and just let me know if there's any issues with accessing it. But it should be available right on the Moodle website. I also have a question here that just came in that says, do you know if a tax preparer would be able to use this spreadsheet for annual tax filing?
Oh, yes, I think so. I mean, I actually add up my stuff for my accountant. I mean, if you just look at your Schedule F, the Schedule F asks you about things that are a lot less specific than this workbook asks you, right? You're getting a lot more detailed in this workbook than Schedule F ever will. So if you can use this absolutely to add up all of those your cash expenses for the year, and you're more than likely your accountant is going to calculate depreciation differently, because as businesses we can accelerate depreciation. This is trying to get at depreciation kind of a more true depreciation or economic depreciation for your farm. So it'd be a little bit different in that respect, but I would think your tax preparer could easily look at this workbook and summarize what they need for your Schedule F, no problem.
Okay, great. Looks like the question got answered, and I don't see any more coming in, so I guess we'll go ahead and move on to the next section.
Okay, great. So this is actually, I'm kind of make a little plug here for a project that's directly related to that workbook. Right now, as of this week, we're actually starting up a project which is called the Central Minnesota Vegetable Benchmarking Project. This is a project that was brought up in part through the Sprout Food Hub and the 8-county region where they work in that central region of Minnesota. So that Morrison, Wadena, Todd, Ottertail, Douglas, Aiken, Mille Lacs, Crow Wing, Cass area. And with this project, we'll be working with producers to organize this workbook with them. And just the same thing that I gave an overview of. And we're going to be using this to develop benchmarks for vegetable producers in this area, in large part because we have a lot of benchmarks if you want to look at if you're raising corn or soybeans and you want to see how you compare to other people that raise corn and soybeans, there are a lot of financial ratios and benchmarks that you can use to compare yourself to. There are some certainly in FinBen that our friends at through Farm Business Management Program have collected, which is great and it's useful, but it still isn't a very large collection of farms that have done that. And so this is an opportunity we'd like to invite anybody that is a vegetable producer that kind of does mixed vegetable production and direct markets some of that vegetable production to get involved in. We're looking for 20 participants in those 8 counties of central Minnesota. So if you have if you're beyond the shoebox stage, you know, I guess I don't want to just dig through the shoebox with you, but if you kind of organize your shoebox numbers in some organized fashion, we'd love to hear from you. I would love to hear from you. What's that, Karen?
Sorry about that. I wasn't me. I think we just got somebody who had an unmuted line. I'm going to mute the lines again. No problem. Oh,
okay. Very good. I'd love to talk to you if you might want to participate. If you live in that area, you do vegetables, if you might want to participate, it's a way of organizing your records, creating some basic financial reports, and then we'll do a little coaching comparing your finances to these benchmarks that we'll be putting together. There's also a $75 gift card as an incentive to get involved in the project. So please contact me if you have any kind of interest. So we'll be doing data collection here in the spring, February, March, and some stuff will be happening after that. So another question we I think is really important in terms of local food production is this issue about which parts of the farm are making money, right? It's been my experience that a lot of people that produce for local markets like to juggle a lot of enterprises. I know I do. Like I said, we do layers, we do broilers, we do hogs. We've got a milk cow on farm. We do produce. We market a bunch of different ways. So sometimes it's difficult to say, geez, you know, if we're only looking at the numbers for the whole farm, we can say, we did pretty well last year. We didn't do very well. But at the whole farm level, it's kind of difficult to say, you know, what brought in the money, right? Which parts were profitable and which ones kind of we sunk money into. You know, your best way of doing that is to conduct an enterprise analysis, kind of tease out those costs and allocate some costs enterprise by enterprise so you can kind of just look at vegetables or look at just at hog production or look at just dried bean production and say how profitable with just that slice of our farm. And one way to do kind of a very simple kind of glossed over comparison is what people do is called a gross margin analysis if we're looking at across enterprises. So we'll get into these two things. So in order to do this, what we really need, and this gets into that broccoli part about some decent records, is we need a decent chart of accounts. By chart of accounts, it's just something that's more specific than a number written down in a ledger that has no information tied to it, if you will, right? You just writing stuff down is good. You recorded it, but it's not good enough. You need some context behind that number. So when we're talking about chart of accounts, what we're talking about is creating categories and subcategories, right? So for example, if you do like 4 different types of crops, you do vegetables, you do dry beans, you do some hay production that you sell, and then you do, I don't know, soybeans. You have 4 different crops. If you labeled all of your expenses for each of those different kind of crops as just crops, well, you're going to get at the end of the year and it's not going to be helpful whatsoever. You're not going to know which of those crops because you can't tease out which of those crops is profitable and which is costing money. So it's a little better if we get down to the actual enterprise, crops, beans as a sub-account, and it's even better if we get down more specific from not just the enterprise, beans, but actually a subcategory for that enterprise, such as seeds or capital expense, if you will. Here's an example, kind of how I do chart of accounts and how I do some basic bookkeeping. It seems really old school, but I found in my own experience and in my own life that I will not, in the middle of the summer, sit down and do entry in a computer. I will not do it. I've tried. I can't pull it off. What I can do at the end of each evening, I can put in expenses in an old school ledger, as you see right here. Here's a picture of my own ledger that I took this morning. And as you see here, here's an example of an entry over on the right-hand side, right? So I made one expense to Fleet Farm. I went to Fleet Farm on June 2nd, and I paid $80-some. And what I did with that one expense, I recorded it not as one expense to Fleet Farm, but I recorded it according to my chart of accounts. I recorded it according to the different enterprises. So one here are general supplies for the whole farm. I bought some gloves. One's related specifically to broilers. I bought some pine shavings. And one's related specifically to our milk cow. We bought some diatomaceous earth and some lime, right? So I give what the enterprise is and what the actual expense was. So at the end of the season, you can start making sense of these things as opposed to just guessing, like, oh, yeah, that one day I was in Fleet Farm. Where did I put that receipt? I don't know. I think it was mainly spent on vegetables. Well, you're just guessing at that point. It's way better if you just record these according to your enterprises in a good chart of accounts as you go through the season. Here's an example of just some of my livestock chart of accounts that I follow. So for broilers, supplies, feed, the cost of the chicks, processing, capital expenses, right? So it's pretty encompassing of what I see each year, and I put things in according to those different buckets. You see the same thing with hogs. Feed, supplies, cost of piglets, processing, any kind of capital expense. Last year I built a little hog pen for some hogs out on pasture. I put that down as a capital expense. Layers, supplies, cost of chicks, feed, processing, you get the idea. Trick for you is to say, what are the enterprises I want? How do I want to split out my farm? How do I want to split it up? And when you decide on that, set up a chart of accounts accordingly. In terms of just sort of how it's done in terms of recording and record organization, hey, I've been just as messy as anybody, but this is where I've come over the years, having been at this on my own for about 10 years. What I always do is for any kind of receipt, shortly thereafter, I write just right on the receipt before it gets recorded in the ledger, what was it? Because sometimes you look at some of these things, and once a few days passes, you have no idea what you spent it on at your local lumber mart or Menards or wherever you spent. Sometimes it's easier. So here's a wand for a greenhouse. This one's for a high tunnel repair. What I do then is my general organization, and this can get ugly, but it typically gets done. Is we just have a simple 2-file system where on the top. I put in receipts that have not yet been entered into the ledger, my old school ledger in the previous slide. And once they're entered, I put them down here for filing at a later date. So that's kind of how I keep things organized. And after a lot of experimentation with them over the years, keeping it simple like this has ended up working for me pretty well. You might do Quicken, you might do QuickBooks, you might do this very differently. You decide what works for you. As long as it gets done, that's what matters. So what we're doing in enterprise analysis is we're trying to separate out all of those direct operating expenses for each of the enterprises, and we're trying to allocate from the whole farm some things according to those enterprises. So for example, a little example here is we have a tractor. The tractor is in our instance, 80% of the time is used for vegetable production, right? 20% of the time it's used for livestock. So for the most part, it is used for vegetable production. And so what we need to do is allocate that depreciation expense of the tractor. We also need to allocate that fuel expense for the tractor accordingly, right? If most of the fuel is being used on a yearly basis for vegetables, take that expense, multiply it by 80%, and that will then go into your vegetable enterprise. For what's left over, the other 20% is going to go into the other enterprise or your livestock enterprise. You split it up how you see fit. So what we want to do is take those operating expenses, those direct and overhead ones, depreciation expenses, and we allocate them from the whole farm to each enterprise. The one thing I'd like to point out is that this is something that already is built into that spreadsheet that I was overviewing previously. So I'm just going to do a quick share again. I know it's dangerous going to Excel sheets here. But what we'll see, okay, give me a second. I'm going to go here. All right, here we are. Remember, number of tabs at the bottom if you're not used to playing around with a lot of Excel. Here's our income statement, projection, scorecard. Over here we see enterprise allocation. So if we got our income statement set up, and we have it set up, it's working right, we have the right information in there, all of that information is going to show up in these gray boxes automatically, right? If we notice here, we have enterprises. This is used to split up produce versus non-produce. If you had other enterprises you wanted to split out, we could simply add another column over. You could add another column over here in Excel if you're comfortable enough with Excel to do that. But for this instance, this is vegetables sold. All that goes into produce revenue. Your non-vegetable production, all that goes into non-produce. Again, this is sort of made up for vegetable producers. Other income, you can split it here between the two. Over here, advertising, marketing. Split it out according to the dollar amount spent on produce versus non-produce. And again, remember I talked about allocating those whole farm expenses. If we have an expense, it's going to show up here from our income statement for your auto and truck expenses. This is this is set up so you allocate it between produce and non-produce based on a percentage of use, or what makes sense for you. So in this instance, 80% is used at produce, 20% is non-produce. And after you work your way through this spreadsheet, there's also a place here for hours. And oftentimes we're not good at collecting that, so I'm not going to spend a lot of emphasis on it. It will automatically, in this next tab, create an enterprise analysis output for you. So again, this is made to split out produce from other enterprises, and that's what it's going to do on a per acre basis, putting your total number of acres operated for produce, and based on what you did on that previous tab, it's going to automatically calculate your operating expenses, your gross margin, your depreciation expenses, net operating income, and the like. So again, I feel that this spreadsheet is something that you can use. It's a tool, free and available. It's in the Moodle site, and you can just run with it. You can use it to do these simple enterprise analysis here. So I'm going to stop sharing that. And again, you know, on that spreadsheet, there's this part in here. This is what the output would look like at the spreadsheet. And you'll split it out by the different enterprises. The one thing I did mention is this issue about a gross margin. So sometimes people will use this to compare enterprises, right? And what we're doing with the gross margin, it does simplify things. You know, you may not want to read a lot into it, but it's a good way of doing a comparison. And what we're doing is we're doing a comparison by just your, what we call it, your net revenue, if you divide it by your total revenue per enterprise. And so what we're doing is we're really looking at those operating expenses here. So as a broiler example, in terms of our cash sales for broilers, we did $5,000 in sales. It's our total cash sales. We had $3,000 in cash expenses. So again, if we're just looking at net cash income, you know, that's $2,000. 2,000 divided by 5,000 you kind of think about, so you have a 40% gross margin if you're looking at those cash expenses and revenues for broilers. And so the way people will use a gross margin is once they break out enterprises, what we're going to do is we'll just do kind of a simple comparison, right? So these are based in part kind of some what do you say, rounded numbers from my own numbers with broilers, you know, $4,500 in sales for broilers last year, $3,200 in cash expenses. We have a net revenue for gross margin of 28%, right? So we're holding on to 28% over those cash expenses. Hogs, 26%, vegetables, 80%, right? So it's a way of doing that side-by-side comparison to say, okay, you know, just do the gross margin. You know, how do these things compare? Again, there's some limitations. One, we're not measuring kind of how different enterprises would complement one another, right? Oftentimes, those of us in vegetable production will do some kind of livestock production because of the manure and those inputs really complement vegetables really well. Even though the margin's quite a bit lower, we're like, you know what, I'm not putting a lot of labor into it. And I like those cash sales at a certain time of year, right? So you need to look at this, do the calculation, just like those marketing costs. You have a conversation about it, and you put in a little more context into place, kind of thinking through, you know, which enterprise is doing what for our farm, right? Labor is left out of this gross margin calculation. That's a big one, right? So it's very much simplifying things. Of course, vegetables has a higher gross margin, because the amount of time you're spending on an acre of vegetables is so much greater than you're spending on a few hundred broilers, right? So surprise, surprise, right? Again, you can also break down each of these enterprises a little bit further like we did previously by marketing channel and by marketing costs. So one thing I just want to make mention of, just because I'm finishing up this research right now, is there's a student, Maria Keeler, from the Center for Small Towns, that assisted me this summer to do this West Central Farmers Market Pricing Study. It's just, I would say just within the next week, we're going to release it. And in this study, we looked at 8 groceries in the West Central region, from like a Stevens County, Morris, on up to Alexandria and Fergus Falls, Otter Tail County. And we compared prices at those groceries to 7 farmers markets in West Central Minnesota. So we collected the data about pricing at farmers markets and at groceries. And I think it's going to be very useful for those of you that do markets and do fruits and vegetables in particular, to think about your pricing for the upcoming year. So you can say, how do I compare to mainline grocers, the average of mainline grocers? How do I compare to organic prices, at least in this region of the state? And I just, it's maybe representative of other rural areas of the state. Maybe it's quite a bit different, not representative of metro area, I don't know. And what major findings that we had here is actually farmers market prices were cheaper of 6 of the 9 items that we looked at in terms of a market basket, some of the more common vegetables that are sold at farmers markets. And a couple of them were statistically significant in terms of the price differences. So again, just look for this. Maybe there's a way through Local Foods College I can kind of get this out to everybody, but it'll be published through extension here in the next 10 days or so. So again, now you've listened to me blab for quite a bit. I'm trying to bring this thing home for a bit. I'm gonna just give a quick recap. I mean, if you've done a little bit of farm business planning, you kind of want to do a little bit more, or you're at the place where you're like, you know, this is some of this broccoli kind of stuff that I know I should be doing, but I just don't get around to doing, or I don't do very well, or I just kind of don't know what I'm doing with it. You know, basically, my advice to you is just to measure some basics, make some goals, and maybe based on your goals, get to some of the things that are most important for you to measure, right? Having done measured some of the basics, use this information, you know, and to get there categorized based on your needs, based on the enterprises that you're using, and use this information. It's there to make good decisions so that you're more profitable, more efficient, that you have a better livelihood and a better life with your farm operation, right? That's their purpose, that's their use. It's not an academic exercise. It's not just putting a bunch of numbers in a spreadsheet for no darn good reason. It's a very good reason for doing this. And I think I'm sure if you undertake some of these things that you're going to learn something, and you're going to get some insights about your operation and how you can do some things differently. In terms of other resources, some resources are there in the Moodle course. A couple in terms of written resources I'd like to highlight. One is one from our own University of Minnesota called Building a Sustainable Business. There are worksheets in here. This is something I've used with beginning growers, that you can get this book. It's free and available online. You can download those worksheets. You can write on them. You can enter numbers, make it as messy as you want, but these worksheets are very useful just to get you going, get you organized. I think it talks about all this stuff in a very organized fashion. Fearless Farm Finances is one that came up from Moses just a couple of years ago. For those of you, especially you're on the organic and sustainable ag side of things, it might be something you want to check out. I find it a pretty accessible read. But also in terms of a resource for any of you, if you do want to kind of really get one-on-one good technical assistance and really dig into some of this, any one of you could reach out to through the MnSTU campus Farm Business Management program. I saw our own Keith Olander on here out of Brainerd, and some of you know Thaddeus McCammett in terms of specialty crops. And these folks are available to help you with some of this record keeping, to do some of the stuff that I'm talking about, and work through a program called FinPack. But I don't want to get too deep into that. So, Karen, do we have any interesting comments, questions?
Ryan?
Yeah.
I have a quick question. This is Kathy. And I apologize if you already answered this, but have you used like QuickBooks? Is there some QuickBooks schedule that's already set up for farms or not? Yeah.
To tell the truth, I mean, we've used QuickBooks off and on, and this is my experience with QuickBooks. We've used it off and on. My wife is much better at it than I ever am, and generally I've just found a fair number of bells and whistles in QuickBooks that just sort of make my life complicated. Setting up those charts of accounts, right? I mean, maybe I've just never given it enough time, but certainly there are preset reports in QuickBooks. You know, oftentimes people will do just a cash flow summary in QuickBooks. That's already set. If you're already using QuickBooks or you're already using Quicken, those reports are already set in there. It's just a matter of hitting go, right? As long as that stuff's up to date, you're good to go. And so for me, it hasn't worked. You know, I'm an Excel guy. What can I say? But if you're using QuickBooks, some of those things are already in there, without a doubt.
All right, Ryan, I'll throw in a question in the chat box real quick. I had somebody ask, would you comment on the use of break-even analysis for pricing?
Oh, right. Yeah, that's a good one, right? Yeah, goodness. And does this relate, is this a kind of a vegetable question, or is this a livestock question? I think sometimes it gets really complicated in the world of vegetables.
Well, it's not specified, but I'll let you know if they focus on what they're thinking of.
Yeah, yeah. But, you know, there's another one that I could have hit on here that is also a very common calculation that people will make in terms of break-even analysis. And so what we're trying to do with the break-even analysis is say, okay, here's the cost. Let me see. We're going to talk about what are the costs to create one thing I'm raising. So what's the cost per hog to raise it, right? We talked about direct expenses, those net cash, those cash expenses. So if we add that up, and then we add in some of these overhead expenses, kind of like we do with an enterprise analysis that we were going through, you're going to find what does it cost me to produce one hog, right? In produce, it gets really crazy because oftentimes it's a real mix. So just to keep ourselves sane, to keep myself sane, what I'll do is I'll do that on a per acre basis. I'll just say everything's mixed. It's mixed produce. What are our direct costs, our overhead costs for that enterprise, and what does it cost us to produce that, right? And it gets a little easier if we're talking about an animal, right? So if we know our costs first for an animal and then on a per pound basis, then we know what it costs to raise an animal on a per pound basis. And then based on that, then you got the decision to say, okay, what's appropriate pricing here, right? Should I do, and again, I might direct you to either Fearless Farm Finances or Building Sustainable Business, because they talk about kind of pricing strategies, right? Some people will just do a cost plus. So for example, I sell my hogs, I do it as a cost plus. What are my costs for hogs, right? What's it cost me to raise these things, including the overhead costs, and I add 25%. That's how I price hogs. Other people will say, geez, we need to look at the entire marketplace, you know, and do some kind of a relative pricing. You're like, well, if I added 30%, wow, I'm not going to sell anything, right? So that's the strategic decision.
I did receive a note back that they were asking more about the vegetable end of things. Fruits and vegetables, how you handle that. So I don't know. You kind of expanded on it earlier, but. Right.
Yeah, you know, see, okay, to do vegetables right, and I'm going to say this, I'm going to couch it that way in large part because very few of us are actually doing this. We need to do enterprise budgets on a per crop basis. And to really do that, what you need to do is say, okay, here's what I spent in bean seed this year. We need to do some basic time trials about our time investment into beans, right? So again, so many of us do bed by bed by bed. What we need to do is do what we're talking about, an enterprise budget. Do an enterprise budget on a per crop basis, so that then you do know what's going in directly to that one crop. And with that, the same way as then you're going to do a markup, you'll know your break even for that crop. Then you can do a markup or a margin and come to kind of a better sense about what a good price is for that crop. But again, not a lot of us are doing that, and there's not a lot of good data to do that. I know our friend Craig Chase down in Iowa State has some organic crop budgets that seem pretty useful. And he's done some research trying to collect the data for individual crop budgets. So if you want to check out Iowa State, might be a good place to start. And they have some enterprise budgets specifically set for individual vegetable crops. I might start there. But yeah, it's a tough one, I would say.
Ryan, I was remiss earlier, and I missed an earlier question too that should be a quick one to ask. As somebody who wanted to know how to access that information on the West Central Farmers Market pricing study, you might have mentioned it, but if you could say where to access that information once it's done.
It's not finished yet. It will be in the next week. I mean, do we have a way that we email everybody that's in the local foods college?
Yeah, I believe contacting either Linda or Anna Peterson would be the way to do that.
Yeah. When it's complete, I'm going to post it here at the local foods college, or there's some way that they can get that out. Otherwise, if you want to make contact directly with me, my email is right there on the screen right now, pesh@umn.edu, and I'm just happy to email it to you. We have a solid review process at the university, so whenever I think I'm almost done with the project, I get it reviewed by some people, and they throw me some curveballs, and it takes me longer to get it out the door than I want to. But that's life, you know. We want to make sure things are done right. So.
Well, I wanted to leave a space for somebody else to chime in if they're using their microphone. I have a question on the chat about enterprise budgets. Peggy asks, are enterprise budgets laid out in Fearless Farm Finances?
Yes, they are. I'll even tell you the chapter. Yes, it is here. Chapter 15, enterprise budgets. There you go, chapter 15.
All right, not hearing any other chime-ins real quick, I'll throw in another one from the chat box. Got a question, well, two questions. To Rosemary, who just wrote, that was Fearless Farm Finances that Ryan was holding up. And Ryan, am I correct that there's a link for that on the Moodle site?
There's a link on the Moodle site, that's right.
Yep, so also anybody who's looking for that book, feel free to check out the Moodle site.
I think if you Googled Fearless Farm Finances, Moses, or just Fearless Farm Finance, it'll come right up. So
another question that we had here was, Ryan, have you done any updates to your food shed calculator?
No. No. But, you know, there is a more updated version that came out of the Leopold Center. I know that they've updated their calculator, and which is using the same database as I did for the Minnesota Food Shed Calculator, but and that comes through the USDA, it's the Food Disappearance Database. And so, please, Iowa's stealing the show here tonight. Go to Iowa, go to Leopold Center, and put in what do they call it? Food marketing calculator, food estimator, food marketing estimator, something like that, and you'll get there. You'll find it. It's a good resource. But yeah, those numbers are they're probably 6 years old now. That being said, I don't think that people's eating habits change, but they change fairly slowly, right? And a lot of times people were using that food shed calculator just to do real basic, rough calculations. And I think it still works for some good rough calculations. Just to say how big is the market for apples in my area or something like that. Works well.
Great. Well, another follow-up question then, somebody posted here was, after you enter your information into your journal that you had showed us a picture of earlier, what do you do with that information after that? Total your categories?
Yeah. What I do with that information after that, again, like I said, I'm an Excel person. I'll just show this, okay? For the danger of just showing everybody my own financial records, but I'm going to. Oh goodness, here. This is what my spreadsheet looks like, right? So what I do is going from my paper ledger. What I do is I then enter all the expenses. If you see down here, I have income, expenses, and something that reconciles them or tallies them. So in expenses, what I do is I will put in my ledger. Here's the date, place, I put the cost, I put a note, right? And then over here, I have, over here, I have a drop-down menu where I will choose the enterprise category. In this case, this is CSA marketing, and I will choose my tax category. I also set this up for my Schedule F. So that person before asked about Schedule F. This is kind of how I do it. I then put it in, there's an advertising category in the Schedule F. So I then choose the categories, and then what happens over on the right is the categories get tallied up, right? So I can tally up all the expenses for broilers. I also tally up according to my sub-accounts. So here's broiler supplies, broilers feed, broilers cost of chicks, processing capital expense. And then I'll do my revenue, then I come over here with my gross margin, right? So that's kind of how I do it. And so you go from a paper ledger. For me, I'm an Excel person, so I go to Excel. Again, Kathy was talking about QuickBooks. Some people then may enter into QuickBooks, right? I like a paper ledger just because I will not open QuickBooks in the middle of summer. I won't. I've tried. I won't even open an Excel sheet to do this in the summer. If you're like me, middle of July, you're coming in and it's dark and you're tired and you want to sleep, and I can open up a book and write something down with a pen, and I can do that pretty well. So I mean that's why I got the system I've got.
All right, thanks. I'm looking for any new postings in the chat box. Anybody else out there want to pose a question?
They've had enough.
I guess so.
Folks. Man, this can hurt your head some days, I know.
Well, I'm not seeing the chat box light up any further. Again, I'll just reiterate a lot of these resources that Ryan talked about. They're available on the Moodle webpage, so please feel free to check that out. Here's a little chat thing real quick. Just somebody wanted to say thanks very much. It's been really useful. So a lot of good feedback from the crowd, Ryan.
Right on. Great. The crowd. Yeah, so I just emphasize that you want to do some of this. If you want to use that worksheet, please do so. Free and available. It's on the Moodle site. That farmers market pricing report is going to be coming out. We'll get that out through Local Foods College. You can also get it directly through me at my email. But also, I really want to point out, if you're a vegetable producer in Central Minnesota, if you want to dig into some of this stuff, we're going to have this project, the Central Minnesota Vegetable Benchmarking Project, in the 8 counties where Sprout operates, starting this week. And I would love to hear from you. If you have any interest in participating with that, there's a small stipend for participating, but I think the real value is working on getting your own records organized, and also learning from the averages and those benchmarks from the entire group of vegetable producers. So I think this would be pretty helpful.